So picture this, you've been eyeing that dream home or considering starting a small business, but the high cost of borrowing money has held you back. So good news might be on the horizon in South Africa that the central bank, known as the South African Reserve Bank, could actually soon lower the interest rates. And lowering the interest rates could actually make loans more affordable. So this potential move comes as South Africa's real interest rate, which is the difference between what you earn in savings and how fast prices are rising, reaches its highest level in nearly 2 decades. So guys, please note that I'm not a financial advisor. If you're seeking for any financial advice or a financial advisor, then please be sure to look for someone who is certified and also who is registered with the FSCA. So the real interest rate is the difference between the interest rate that you earn in your savings or pay on your loans and the inflation rate. So right now, this real interest rate is sitting at its highest since 2006. And to simply put it, if the interest rate on your savings account is 8.25%, but the inflation is only 4.6%, the real interest rate is 3.65%, which is 8.25 minus 4.6%. So for example, imagine that you have 10,000 rands in a savings account earning about 8.25% interest per year, but at the end of the year you'd earn about 825 rands. But however, because prices are only rising by 4.6% or 460 rands on average, your purchasing power has increased. So this high real interest rate makes saving more attractive, but it also means that loans are expensive relative to cost of living. So inflation in South Africa has slowed to 4.6% in July, which is the lowest it has been in 3 years. So inflation measures how fast the prices of things like food, fuel and clothing are actually rising. So a lower inflation rate means that prices aren't increasing as quickly as before. So let me make an example. So let's say a basket of groceries cost you 1,000 rands last year. With a 4.6% inflation rate, that same basket would actually cost you now 1,046 rands. So this is a smaller increase compared to previous years, making it actually easier for families to manage their budget. So the gap between the South African Reserve Bank's benchmark interest rate and inflation has grown to 365 basis points or 3.65%. So this is the biggest gap since May 2006 when the South African Reserve Bank was raising interest rates aggressively to control inflation. So imagine if a few years ago the inflation rate was higher at 6% and the interest rate was 7.5%. So the gap would only be 1.5%, which is 150 basis points. Now with inflation lower and interest rates relatively high, the gap is much wider, suggesting that there's a need or there's a room for central bank to actually reduce the interest rates. So investors and traders in the financial markets are betting that the South African Reserve Bank will cut interest rates by about 65 basis points or 0.65% by the end of the year. So forward rate agreements, which are financial contracts used to speculate on future interest rates, are reflecting this expectation. So if the central bank's current interest rate is 8.25% and it cuts by 65 basis points, the new rate would be 7.6%. So this could mean lower monthly payments for people with variable rate home loans, making housing more affordable. The South African Reserve Bank usually changes interest rates in small steps of 25 basis points or 0.25% at a time. So the next decisions will be announced in September and November. And some experts think that a big cut of 50 basis points or 0.5% might happen in September, but others will actually believe the bank will be more cautious. So for example, if you have a home loan with a variable interest rate, even a small reduction of 25 basis points can actually lower your monthly payments. So for instance, on a 1 million rands loan, a 25 basis points could actually save you around 200 rands a month. So lower interest rates can encourage people to borrow more and spend more money, which boosts the economy. So in a country like South Africa, where economic growth has averaged less than 1% per year over the last decade, this could be a significant boost. So for example, if you're a small business owner, a low interest rate could actually mean cheaper loans to expand your business, hire more staff or buy new equipment. And for consumers on the other hand, it might mean more affordable car loans or credit card payments, leaving more money in your pocket for other expenses. The South African Reserve Bank aims to keep inflation within a target range of 3% to 6%. They want inflation to be stable around 4.5%, which they see as a sweet spot for economic growth without causing prices to rise too fast. So for example, if inflation stays around 4.5%, the central bank might feel confident enough to cut interest rates, knowing that prices won't spiral out of control. So this balance actually helps ensure that people can actually plan their finances with more certainty. A strong South African rand and lower fuel prices are helping to reduce inflation faster than expected. So this could lead to the central bank cutting rates sooner. So for example, if the rand strengthens, imported goods become cheaper, which helps lower inflation. So for instance, if you are buying a car that's imported from, let's say, abroad like America or London, a stronger rand means that you might actually pay less for the same model than you were if the rand was weaker. So economists are adjusting their forecast based on the latest data, and some expect inflation to average 4.5% this year and even drop to 3.4% next year. So this could support a series of interest rate cuts over the upcoming months. So for example, if inflation drops as predicted, you might see your loan interest rates go down gradually over time, making it cheaper to borrow money. So this could encourage more spending and investment, helping to actually boost the economy. So guys, we've came to the end of the video. With that being said, please tell me what are your thoughts on this potential shift in South Africa's interest rates. Do you think that lower interest rates would actually help boost the economy, or do you have concerns about the timing of these changes? How do you think this will impact your personal finances or business plan? Please leave all your answers in the comment section below, and I'll catch you guys in this video right here where I talk about the last minute changes that are made for the two-pot retirement system. So go ahead and watch this video guys, and I'll see you on this video.